Good morning. It is Wednesday, September 6th, 2023, just before 11 a.m. on the East Coast. This is Rob Sin at CEO Technician on Twitter, at Goldfinger on CEO.ca. And you're watching my YouTube channel at Goldfinger Capital. So, a lot going on here this morning. Markets are getting hit pretty good out of the gate. Pretty good little smash down here in the first hour or so of trading. We are at session lows in the E-mini S&P right now. Subscribers to my premium service know that we got into puts on the S&P 500 yesterday. Also laid out a very bearish fundamental case for the broader stock market here in the month of September. The storm clouds seem to be mounting on the horizon, and I'm not going to go into all of the fundamental case, but I think that investor complacency is elevated. I don't think market participants have as many hedges on as they did, let's say, 6 months ago, back here in March, when we had that regional banking panic. And the environment just seems kind of ripe for a bit of a downturn. You could call it something as simple as a pullback, but I think that we need to work through and shake out some of this complacency that is out there. And just strictly from a technical standpoint, we look to have put in a lower high here last week. So some people would say last Friday's non-farm payrolls report was goldilocks. It was not too hot, not too cold. It was just perfect. Stocks gapped higher, at the open on Friday, and then proceeded to sell off and close near session lows. And obviously, we've continued down here Tuesday and Wednesday of this week. I also want to point out that for tech stocks, the mega cap tech stocks that have been the darlings of 2023 and the real market leaders, even yesterday, without Tesla and Microsoft, the S&P would have been much more red than it was, but the tech leaders continued to hold it up. But, we had that NVIDIA earnings a couple of weeks ago where NVIDIA just blew away all estimates. The numbers were insane, out of this world. And NVIDIA, it initially went higher, traded above 500, but then turned right back down. And the Qs also look to have made a lower high. Here's NVIDIA. So the earnings they reported, the guidance they reported blew away any expectations, but it's not making new highs. And it's actually down a bit since they put out those earnings, right? So we're starting to see evidence of selling on the news. Perhaps all the good news is priced in. And just simply put, financial conditions continue to tighten. And it's simplest to just look at the dollar index chart. This is a pretty clean uptrend here the last couple of months. It's approaching highs for 2023. And a strong dollar and rising treasury yields is not a bullish recipe for the broader stock market. It might not hurt certain, small segments of the stock market, but the overall market, this is clearly a negative. This is headwinds for risk capital to find their way into equities. Here's 10-year note yields, not at a new high exactly, but bumping up against it. And this is just simply like these charts, the dollar and the 10-year note yield. This is telling us the Fed is not waving the white flag yet. The Fed is serious. There are no rate cuts coming anytime soon. And yes, it's possible there could be another hike in the future, right? It's probably not likely, but it's possible. The threat is out there. And just simply, if the Fed stays at 5.5% and continues quantitative tightening for another 6 months, that's sucking a lot of liquidity out of the financial system. Financial conditions will continue to tighten. Gold and silver holding in fairly well, still above the 200-day moving average on both, but it looks like, simply stated, we put in a lower high here, last week. Gold stopped exactly at 1980 on the gold futures, 1980 to the dot. And again, even with that non-farm payrolls, with the revisions to prior months, and clearly the farce that the whole thing is, they sold on the news, right? And we're down under 1950 this morning. So you can think what you want. Price action is telling you gold is not ready yet for any sort of breakout. Gold miners, and this is also just quite a negative look. I mean, it's unlikely that gold is going to break out above 2000 when the gold miner charts look like this. Newmont, the world's largest gold producer, is hanging out near 52-week lows, multi-year lows. This is not a great setup. And some people are arguing over head and shoulders, knees and toes. Simply stated, there's no head and shoulders bottom in the GDX chart. There's not even the contemplation of one right here. So if anybody's showing you a head and shoulders bottom pattern, just tell them they're crazy. I talked about the head and shoulders top interpretation several weeks ago, and I said simply, I don't think it is by the textbook definition. I think it's just a double top. And I'll even just go to say we're in a down trending channel. So I don't even need to draw the lines, but you can see, imagine drawing a line through there and a line through there. It's a down trending channel. And until we break back above this blue line that I have drawn on the chart, that downtrend is still intact. Don't overthink it. Don't hope it looks different. It doesn't. There's no head and shoulders bottom here in the GDX. The most bullish case I could think of here for gold miners is that we come down here over the next, I don't know, 3, 4, 5 trading sessions and retest this August low. We find support there and rally strong off of that 27-25 level and confirm a double bottom. That would be the best case I could possibly think of right here for the GDX, but that's just my imagination. We have no evidence of that yet, right? So you can't trade on that. Newmont, I mean, yeah, this is the world's largest gold producer. This is one of the worst charts in the entire stock market, right? This is not indicative of a bull market in gold. And, there's a lot of fundamental explanations for why this chart is like it is, right? One of their largest mines has a labor strike. They're shedding millions of dollars a day due to that strike, right? The fact that that mine is not operating is costing them millions of dollars a day. The cost to mine gold at their various other mines has gone up and continues to go up, right? So there's lots of fundamental reasons for it. But even with all those negatives, if gold was really about to strongly, clearly break back above 2000, I would have to think we'd be at least above $40 or $42 a share here on Newmont, but we're not. We're hanging out near the 52-week lows. Final observation I want to make is uranium sector. Cameco lowered guidance for one of their big mines in Canada on Sunday night. The stock initially gapped down and then proceeded to trade back to flat yesterday. That is normally very positive price action. Bad news, stock comes back to flat. But now look at it. It's selling off again here today, and the candlestick that Cameco printed last Friday was a shooting star. Okay, it's a doji star. It gapped up, traded up, but closed near the lows, right near where it opened on Friday. And we are confirming that lower now with these back-to-back red candlesticks. Let's see how this day closes. But a little deja vu. This sector, look at NextGen, had a huge rally, yesterday. In the past couple of weeks, it's put on $400-500 million in market cap. And remember, this is not a producer. This is not even a company that has environmental permits to mine its ore body, right? So this will not be a producer for minimum 3-4 years at best case, right? And look at the market cap here, $3.65 billion for a company that isn't even generating any revenue whatsoever. Okay. That is a big valuation. And I have to wonder if the move that we've seen in uranium is getting to be sort of a blow off topping move, right? It's getting a bit overheated, getting a bit ahead of itself. And it kind of reminds me somewhat of natural gas and natural gas stocks in mid 2008. Just that this sector's getting a bit ahead of itself here. Valuations are pretty full, and the rest of the stock market looks like we're about to have a correction. So that's my 2 cents on a Wednesday morning. Have a great trading day and a great rest of your week. I'll see you in the trading lab.